June 8, 2026, a seemingly small event that drew major attention on Wall Street. OpenAI filed for an IPO with the U.S. Securities and Exchange Commission. On the surface, it looked like a standard public listing. Hundreds of companies do this every year. But OpenAI is not a typical company. It is the organization behind ChatGPT. And what the market was really focused on was not the IPO itself, but a different question. If you had to value the future of artificial intelligence, how much would the market be willing to pay? For years, OpenAI remained largely outside public view. No public financial statements, no media presence like major tech giants. Most critical data was kept private. But in recent years, everything changed. OpenAI's scale became too large to ignore. ChatGPT now reaches around 900 million users per week, roughly the combined population of Europe and North America. Very few technology products have ever grown this fast. Behind it sits a massive revenue engine. OpenAI is estimated to generate around $2 billion per month, roughly over $24 billion per year. This level of growth forced both the tech and financial worlds to pay attention, and it pushed OpenAI's valuation to levels rarely seen before. According to multiple reports, the company is valued at around $852 billion, higher than the GDP of most countries. If it were an independent economy, OpenAI would rank among the largest in the world. Just over a decade ago, it was still a small nonprofit research organization. No market value, no global user base, no position in the global tech race. But today, everything has changed. The White House is watching. China is calculating. If AI is eventually valued in the trillions, where will that money come from? From new productivity in the global economy, or from the jobs people are doing today? AI is no longer just technology. It is becoming an economic infrastructure, just like electricity in the 20th century, or the internet in the 21st century. Therefore, the story of OpenAI is no longer just the story of a company. It is the competition for control of the future infrastructure. If the OpenAI IPO actually happens, it will be the first time the market attempts to value the future of AI on a global scale. Back to 2015, when OpenAI was not yet a name the world knew. It was a very different time from today, when artificial intelligence mostly existed inside research labs and universities. It had not yet produced products used by hundreds of millions of people. No company was worth hundreds of billions of dollars. And it had not yet become the center of global technological competition. In other words, AI at that time was just a promise for the future. However, in Silicon Valley, a small group of people believed that would soon change. They argued that AI was not just new technology, but could become the foundation for future industries. Just as the internet changed commerce, or electricity once changed the modern economy. One of the strongest believers was Sam Altman. At that time, he was not the CEO of OpenAI, and OpenAI did not yet exist. Altman ran Y Combinator, one of the most influential startup accelerators in Silicon Valley. Over time, he realized something important. Big technology does not just create products, it creates new centers of power. But alongside the optimism, more and more people began to worry. If AI developed faster than predicted, what would happen? Who would control that technology? And what would happen if systems became increasingly powerful without oversight? A group of people simultaneously believed AI would change the world and feared the very thing they were creating. This very contradiction led to the birth of OpenAI. OpenAI was founded at the end of 2015. From the start, this was not a typical tech company. Its mission was to ensure that artificial intelligence benefits all of humanity. But the founders understood one thing clearly: AI is not cheap. From the beginning, they committed about $1 billion in funding. At that time, this was a very large figure for AI research. Even when AI was in its infancy, building advanced models required massive data, server infrastructure, and top-tier research teams. This is a field where costs increase with ambition. The more you want to create smarter systems, the more data, engineers, and computing power you need. But looking back, what is important is not just that OpenAI was founded, it is how it was founded. From the beginning, this organization carried a clear contradiction. On one side, a nonprofit mission. On the other, a technology that wanted to expand at an industrial scale, which requires capital, infrastructure, and massive growth rates. And as AI accelerated faster than expected, that contradiction began to grow. This is the starting point for the changes that made OpenAI a completely different entity than it was initially. If you want to change the world with a big idea, sooner or later you will realize that ideals and money do not always move in the same direction. OpenAI was no exception. They soon realized a reality. Ideas may be free, but building AI is not. In the early years, OpenAI looked more like a research lab than a company. They focused on scientific papers, technical breakthroughs, and AI safety. Revenue and profit were not the priorities. This model only lasted until AI accelerated faster than expected. In AI, performance and cost always go hand in hand. Each step forward entails a greater demand for data, talent, and computing. The technology problem quickly becomes a capital problem. If the internet relies on servers, then modern AI relies on GPUs. These are chips that handle massive amounts of computation for AI models. The problem is that GPUs are extremely expensive. An NVIDIA H100 can cost up to $30,000, $40,000, and large models use tens of thousands of GPUs. It is estimated that GPT-4 exceeded $100 million in training costs, not counting operations. When ChatGPT exploded at the end of 2022, costs continued to rise sharply. Each question consumes computing resources. The more users increase, the more the infrastructure must scale. ChatGPT took only 2 months to reach 100 million users, the fastest speed in internet history. But behind the growth is a massive bill. OpenAI fell into a paradox. Revenue grew fast, but costs grew even faster. Although it generates about $24 billion per year, the majority is reinvested into infrastructure and research. AI is not just a technology race, it is a capital race. This is when OpenAI faced its biggest contradiction since its founding. Sam Altman and his associates understood this clearly. The entire tech industry shifted course as well. AI became a trillion-dollar market. Money began flowing in at a high speed. Big tech and investment funds increased spending. The race shifted to the capital market. In that context, NVIDIA became the biggest beneficiary. Their GPUs became the strategic resource for the entire industry. The company's value rose from $300 billion in early 2023 to over $3 trillion. This is a sign of a global AI wave. For OpenAI, the conclusion was clear. To lead, they had to change, not just the technology, but the operating model as well. From here on, OpenAI is no longer a research lab, but it has become the intersection of science, capital, and tech power. And that transition opened up a much larger race, not just between companies, but between nations and new centers of power around AI on a more global scale. By this point, you have likely realized one thing. The story about OpenAI is no longer just the story of a company. When AI develops on a global scale, what changes is not just technology, but the entire economy behind it. According to many forecasts, the AI market could exceed the $1 trillion mark within the next decade. This is no longer a niche tech industry, but a new economy taking shape. What is important is that AI does not operate as an independent industry. People often think of ChatGPT, chatbots, or image and video creation tools, but that is just the tip of the iceberg. Beneath it lies a massive value chain. To build AI, you need chips. To produce chips, you need factories costing tens of billions of dollars. To operate AI, you need data centers, consuming electricity comparable to an entire city. According to estimates, electricity demand for AI will continue to rise sharply. That causes AI to impact not just technology, but energy, industrial real estate, and infrastructure. Capital is therefore pouring into AI at an unprecedented speed. Microsoft has committed tens of billions of dollars to OpenAI. Amazon, Google, and Meta are also investing heavily in AI infrastructure. Total spending by U.S. Big tech could reach hundreds of billions of dollars in the coming years. This creates a clear effect. The more capital flows into AI, the more the advantage leans toward those who already have the infrastructure and chips. In this race, NVIDIA has become the most prominent name. Their GPUs have become the foundation of the entire AI industry. NVIDIA's market value exceeded $3 trillion, at times surpassing many national stock markets. That is a clear sign of an AI wave of global scale. But when money moves, power moves with it. The story no longer stops at businesses, but expands into competition between nations. The US still holds most of the most important links in the AI ecosystem. From advanced models, cloud platforms, to high-performance chip design. Meanwhile, China is investing hundreds of billions of dollars to build its own ecosystem. The goal is not just to compete, but to reduce dependence on foreign technology. After 2022, the US restricted exports of advanced AI chips, changing the landscape of competition. This shows that AI chips are no longer just simple tech products, but strategic assets, much like oil in the past. Without chips, there is no computing power. Without computing power, there is no advanced AI. Therefore, the AI race is essentially a race to control the entire supply chain: chips, energy, data centers, and capital. That is why many experts consider AI the most important technological competition of the 21st century. Not because of chatbots, but because AI is creating new centers of power, and OpenAI returns to the center of the story. If the IPO is successful and raises a large amount of capital, what is important is not just the valuation, but the signal. The US is not only leading in AI, but also leading in the capacity to fund this race. In that context, the algorithm is no longer the only important factor. The ability to access capital and infrastructure is increasingly decisive. This is the paradox of AI, a technology accessible to billions of people, but the infrastructure is concentrated in a small number of companies and nations. The more people use it, the more power tends to concentrate. Therefore, OpenAI is no longer a startup. It has become a link in the global power competition, a competition that will shape the economy, investment, and technological order for many decades to come. And the final question is no longer what OpenAI is worth, but who will control the infrastructure of the AI era. OpenAI is not the only AI company, and it is not certain to be the strongest company in the future. So why is the market willing to value it at hundreds of billions of dollars? The answer lies in how investors view AI today. When valuing OpenAI, they are not just looking at revenue or ChatGPT. They are valuing something larger, the role of AI in the future economy. Throughout history, every technological revolution has created giant companies. Electricity created General Electric. The internet created Google. Smartphones created Apple. And now, many investors believe that AI will be the foundation of the next wave. That is why OpenAI's valuation has risen so strongly. According to many reports, the company is valued at about $852 billion. This figure exceeds most publicly traded companies in the world. But most of the value does not come from the present. It comes from future expectations. If you look at revenue, OpenAI is still smaller than many major corporations. If you look at profit, the company is still prioritizing growth. But the market does not stop at the present. They are answering a different question. If AI becomes the infrastructure of the digital economy, who owns that infrastructure and how much will it be worth? OpenAI is completely different from typical startups. This entity is currently the center of attention from many sides. The financial world sees it as a representative of the AI wave. The government evaluates it as a strategic asset, and Wall Street uses it to test its ability to price the future. Therefore, the controversies surrounding this organization are essentially dialogues about the future of the entire field of artificial intelligence. Will AI create a productivity revolution like the internet? Will it create trillions of dollars of new value? Or will power be concentrated in a few companies? Currently, no one has a certain answer. Even the optimists admit that. Tech history shows that the leader of today does not guarantee a victory in the future. IBM once dominated computers. Yahoo once dominated the internet. BlackBerry once dominated smartphones. And then everything changed. AI could follow a similar trajectory. OpenAI leads today, but 10 years from now is still unclear. And that leads to a simple question. If OpenAI IPOs tomorrow, would you buy the stock or bet that the market is too optimistic? However, one thing is becoming increasingly clear. AI is no longer a marginal trend in the economy. According to PwC, AI could contribute about $15.7 trillion to the global economy by 2030. This is a large enough number to change how nations invest and businesses operate. In other words, AI has stepped into the center of the global economy, a place where technology, capital, and national power intersect. That is also why the OpenAI IPO attracts special attention, not because this is a big deal. The market has seen many big deals, not because this is a famous company. What the market is doing is pricing the future, a technology that can change how people work, make decisions, and operate the economy. And if OpenAI goes public, that is not just a milestone for a company. It is a moment where the market first attempts to price the future of the AI era. Not just the future of OpenAI, but the future of the entire technological revolution. And to date, that question still has no answer. When Wall Street buys OpenAI, are they buying a company? Or are they buying the future of artificial intelligence?